Evolution of exchange. Did you know that the first medium of exchange originated in Mesopotamia, which is what is now known as modern-day Iraq, around 3000 BCE? Well, now you do. This early currency consisted of agricultural goods and livestock used for trade. In other words, money has been part of human history for at least the past 5,000 years in some form or another. Before that time, historians generally agree that a system of bartering was likely used. Bartering is like a direct trade of goods and services. For example, a farmer may exchange a bushel of wheat for a pair of shoes from a shoemaker. However, these arrangements take time. If you exchange an axe as part of an agreement in which the other party is supposed to kill a woolly mammoth, you have to find someone who thinks the tool is a fair trade for having to face down the 12-foot tusks of a mammoth. If this doesn't work, you must alter the deal until someone agrees to the terms. Moreover, some of the earliest currencies were objects from nature. A notable example is the cowrie shells, first used as money in about 1200 BCE. Although they may seem random, the shells had several advantages. They were similar in size, small and durable. While the mollusks that produce the shells are found in the coastal waters of the Indian and Pacific Oceans, the expansion of trade meant that even some European countries accepted cowrie shells as currency. Shells in the form of wampum, tabular shell beads, were used as money by Native Americans. However, as the medium of exchange changed to the use of banks, there were still about 1.4 billion unbanked individuals worldwide. These populations are entirely cash dependent. If these populations could access and utilize electronic currency without a bank account, they could participate in the economy without physical cash, which made the central banks to consider developing CBDC, known as the Central Bank Digital Currency, a digital representation of the nation's fiat currency. As the world evolved, so did the means of exchange. And by that, I mean commodity money. These were precious items like shiny gold coins or even giant stone discs known as ray stones on the Micronesian island of Yap. However, a coin minting site was in Ganzhong in the Henan province, China. A mint is the facility where currency is created. Around 640 BCE, this family began striking spade coins, one of the first standardized forms of metal coinage. Millions of coins were circulating everywhere, including the United States. As many as 47,250 coins were minted per minute at the Philadelphia Mint, while 40,500 coins were produced per minute by the Denver Mint. However, the Mesopotamian shekel was the first known form of currency which emerged nearly 5,000 years ago. The earliest known mints date back to 650 and 600 BC. The coins were made from electrum, a mixture of silver and gold that occurs naturally, and the coins were stamped with pictures that acted as denominations. In the streets of Sardis, in approximately 600 BCE, a clay jar might cost you 2 owls and a snake. This currency helped the country increase both its internal and external trading systems, making it one of the wealthiest empires in Asia Minor. Parts of Europe still used metal coins as their sole currency until the 16th century. Moreover, colonial acquisitions of new territories via European conquest provided new sources of precious metals and enabled European nations to keep minting more coins. As time passed, local banks eventually started using paper banknotes for depositors and borrowers to carry around instead of metal coins. These notes could be taken to the bank at any time and exchanged for their face value in metal, usually silver or gold coins. You could use this paper money to buy goods and services. In this way, it operated much like currency does today in the modern world. However, it was issued by banks and private institutions rather than the government, which is now responsible for issuing currency in most countries. Their colonial governments in North America gave the first paper currency issued by European governments. Because shipments between Europe and the North American colonies took a long time, colonies often needed more cash. Instead of returning to a barter system, the colonial governments issued IOUs that traded as currency. The first instance was in Canada in 1685, when soldiers were given playing cards denominated and signed by the governor to use as cash instead of coins from France. The gold standard was established in the 1870s. Under this rule, currency printing was permitted based on the amount of gold a country had in its reserves. Hold on tight, because things are about to get interesting. The 21st century gave rise to a novel form of payment activated with a touch of your finger. Mobile payments refer to money used to pay for goods and services. You can also transfer money to other individuals, such as a family member or friend. It can be done using a portable electronic device like a smartphone or tablet. This payment form first became prominent in Asia and Europe before moving to North America. The technology evolved from payments via text message to allow checks to be deposited using the camera app on smart devices. Mobile payment services like Apple Pay and Google Pay were vying for retailers to accept their platforms for point-of-sale payments. There are also apps dedicated to this payment method, including Venmo and PayPal. Furthermore, in 2009, a man named Satoshi Nakamoto introduced the world to Bitcoin, the pioneer of cryptocurrencies. Bitcoin quickly became the standard for virtual currencies. As at the time of this video, the global cryptocurrency market cap was $1.08 trillion, a 5.54% change 1 year ago. As of today, the market cap of Bitcoin, BTC, is at $501 billion, representing a Bitcoin dominance of 46.41%. Meanwhile, stablecoins market cap is at $124 billion and has a 11.41% share of the total cryptocurrency market. Remember that virtual currencies like Bitcoin have no physical coinage because they are traded on exchanges. Although Bitcoin remains the most popular and expensive, other virtual currencies have hit the market. They include Ethereum, XRP, and Dogecoin. Today, we find ourselves in an age where cryptocurrencies like Bitcoin, Ethereum, and many others are changing the financial landscape. The exchange system has moved from swapping animal skins to minting coins to printing paper money, and today we appear to be on the cusp of the massive shift to electronic transactions. Ancient transaction forms have been co-opted. For example, bartering still occurs on the margins in some markets, such as the business-to-business, B2B, space, and some other customer services. The monetary system will continue evolving as long as humans require a medium of exchange. The question now is, what's next for the evolution of money? Only time will tell. And there you have it, guys. The incredible journey of money, from barter to crypto. If you found this journey as fascinating as we did, don't forget to hit that like button and subscribe for more intriguing stories. Thanks for watching today. Until next time, take care.